What's up, everybody? Welcome to the live stream. Weekly market recap, October 7th, 2022. We got some interesting stuff today. I think this is going to be my best market recap. If you hear any background noise, I'm sorry. My youngest, he's almost 18 months. He's home from school today. Let me just tell you, kids home from school when you work from home in a virtual world is brutal. However, we're going to make it work. And I got some really interesting stuff to compensate. First things first, I always like to start off with something fun, something really fun. We're going to start the first thing. We're going to talk about some taxes, but fun taxes. So let me show you. We're going to share my screen here. We're going to share this screen over here. Let me maximize this so it looks a little bit bigger. All right, hopefully you can see that. So Aaron Judge, professional baseball player, New York Yankees, of course, just hit his 62nd home run. So he hit 62 home runs this year. And a lucky fan obviously caught the ball. So a regular person goes to the game, catches the ball. Immediately when that ball hits that glove, before the home run, that ball was almost useless. After the home run, that dude strikes that ball with the bat over the fence. That ball, they're saying, could be worth up to $2 million. But what does that mean for that young fan? So essentially, that might become a collectible. Now, first, before we get into it, hitting 62 home runs is legit. I don't love baseball. I don't watch it all the time, but I admire sports and skill. And being able to hit 62 home runs, so crazy. But anyway, dude catches the ball. It says right here in this Forbes article, it says it could be worth $700,000. Yeah. I just read another article prepping for this where the guy said it could be worth $1.5 to $2 million. So here's what's funny about this. There's tax planning involved. This guy's life changes. He catches the ball, has a great time, maybe slams a couple beers. Everyone is high-fiving, woo. But here's the deal. It's a taxable event potentially. Check this out. If that ball is classified as a collectible, capital gains are capped at 28%. That's one of the higher end tax brackets. So I don't know exactly how this is going to play out for that individual, but if it's deemed a collectible and that guy tries to cash in and it's worth, let's say, $2 million, over 500 grand needs to be set aside. That's nuts. But here's the good news. You paid for a Yankees fan ticket. You go sit in the bleachers. You catch an Aaron Judge home run, and overnight, you're $1.5 million richer after taxes. I feel like it's a good trade-off. But I just thought that was an interesting place to start. So here's where we're going to go next. We're going to watch a little video. Got a little video put up. Sorry about the sound if it comes across kind of funny. But we're going to watch this video. I just think it's a quick market update. It's going to take 2 minutes. So it's a market update within the market update. But let's watch this together.
Stocks took investors on a roller coaster ride in the third quarter, with an early summer rally coming to an end after the Fed pledged to continue its fight against inflation. The Dow Industrials lost 6.6% for the 3 months, while the S&P 500 index dropped nearly 4%. The Nasdaq Composite fell less than 3%. Despite economic data showing that little had changed, the summer rally reached new heights in July as long-standing fears appeared to ease. However, the upward momentum stalled out mid-August, following a speech by Fed Chair Powell, who surprised investors with his hawkish tone. A brief September upturn quickly lost momentum ahead of the month's Fed meeting, when it announced its third consecutive interest rate hike of 75 basis points. In the month ahead, China's Communist Party will hold its 5-year planning meeting to craft its economic and foreign policy framework. The most immediate economic issue is whether China will maintain its zero COVID policy, which has slowed economic growth and affected global supply chains. Observers will also be watching for policy statements concerning Taiwan. Any militaristic talk by China may represent another geopolitical risk for the financial markets. How's your health? any questions you might have as a result. With such a body of knowledge available, there's always something more to learn. The policy, which
Sorry if you can hear me. I think I accidentally muted that. I'm just going to finish the last 30, 45 seconds. Sorry about that.
slowed economic growth and affected global supply chains. Observers will also be watching for policy statements concerning Taiwan. Any militaristic talk by China may represent another geopolitical risk for the financial markets. How's your health? October is Health Literacy Month, which encourages better communication between medical professionals and their patients. This might be a good reminder to review your current health reports and ensure you're clear on the details. Don't forget to write down any questions you might have as a result. With such a body of knowledge available, there's always something more to learn.
All right, I thought that was a pretty cool video. There's a couple things we got to discuss right off the bat. We got to discuss this right away. So it mentioned China, right? Take China and whatever you have in your mind or whatever you hear on the news and throw it away. That is so far out of your control at all what the Communist Party of China is going to do with Taiwan or their COVID policy. It's something that's so far out of our control that we just have to do a good job planning and preparing for it. Don't spend 1 second, specifically 1 emotional second, worrying about China. The second thing in that video, it ended on health. Immediately, the next topic is something you can control, health. At the end of this, we're going to talk a little bit about health, getting to and through retirement. But that was just a fun video, gives us a little insight. But it's crazy how a video can talk about something so heavily that we can't control or have any control over, and then go to something we have a ton of control over. But I thought that was just a good video. So let's move on to the markets here. Let me share my screen again. So the stock market got off to a hot start this week. You can see, boom, it had a couple really big days. But it kind of leveled off and it kind of dropped back down. But so far, this week, we've made a little bit of money. But again, 1 week does not matter in the long term. We don't want to trade in these times. We're long-term investors. We want to capture the full market. And I'll prove it to you here in a second. But I'm just using the Vanguard Total Stock Market Index as an example to set us up for what we're going to look at next. The Total Stock Market Index is more than the S&P 500. It has over 3,500, I think, as of right now, stocks, large stocks, small stocks, and everything in between. So it's a broadly diversified bundle of all the stocks in the economy. And it's showing us the past 5 days, it's made some money. The past month, it struggled. 6 months, obviously, year to date has been a really tough year. We know that, down 25%. So we're down 25%. What does that mean? Well, let me show you. Let me see if I can find this. Hang on for me. This is live, so I don't have this all edited up. You just got to hang on for a minute. But I promise what I'm going to show you is going to be really valuable. No, those are just text messages from my wife. Right here. Here we go. So check this. Let me make this a little bit bigger. So here's what this is. Shout out to Charlie Biello. This is as of September 30th, 2022. Now, looking at this chart, first thing you notice is there's far more green than there is red. But let's break this up into 2 columns. There's the left-hand column and there's right-hand column. So the left-hand column is right here. These are the top 20 worst 9-month periods. He probably did this because September's 9 months, yada, yada, yada. But there's a really high correlation between these really bad 9 months and recessions or depressions or really bad bear markets. The first one was in 2008 to February 2009, down 46%, 39, 37, 34, 32, 30. So some really bad periods of time. Here's where we are in the blue, down 25%. That's January of this year to September of this year. So this line is blank because we don't know exactly what's going to happen. You can see in this right-hand segment, there's 3 months, 6 month, 1 year, 3 year, 5 year, and 10 year. So basically, here's what this is telling us. Terrible 9 months. Just like right now, everyone's freaking out, making decisions, maybe going to cash, wanting to buy bonds. They don't know what the heck to do, which is a terrible way to look at it. Historically, and these 9-month periods go all the way back to the 70s. So they're really, really bad periods of time. The majority of this column is green. That means after the worst periods of time is when we fully capture the growth in our portfolio. You can see that in this terrible period from June 08 to February 09, in this top row, 10 years later, you had earned 372%, 189 in 5 years, 102% in 3 years. The 1 year was 56, the 6 month. You can see that there are some really terrible periods of time in the short term, the 3 month and the 6 month, and even the 1 year back in 01, that was the dot-com bubble. But in the long term, you make substantial amounts of money. You need to understand historically that, yeah, the market's struggling right now. It is what it is. A lot of it's out of our control. But if you hang on, statistically, good things happen. That's why you got to have a strategy, and you got to have some emotional control. You got to be like a rock. You got to be able to stick to your plan. But I thought that was really interesting to give some perspective on where we're at right now in the markets. All right, where are we at next here? A couple things that we want to talk about is, that's more of Aaron Judge. Hang on. Right here, this is what we need here. The labor markets. So one reason the market is struggling right now is because this is so counterintuitive. I can't even believe we're going to talk about it. But the market is too good. So the Federal Reserve is going to probably increase interest rates again to try to combat inflation. There's becoming a lot more talk about what the Federal Reserve is doing may be counterproductive. I'm not going to go there. I'm not an economist. I don't know. The reason I don't really know is because there's literally a group of people on one side of the fence and a group of people on the other side of the fence. Here's another element of this. It's uncontrollable. We just have to respond. So there's literally nothing we can do to help the Fed make their decision. Like, they're going to raise rates or they're going to decrease rates. They're going to do whatever they're going to do along the way, regardless of what we think. I mean, that's just the bottom line. But again, we can plan and prepare around it. But it's funny, the labor market is too hot for the Fed. Economists react to September's job report. Essentially what that means is the market's kind of struggling. But here's a couple things they say. Here's a few of the quotes. Labor market is too hot for the Fed. I think it keeps them on a pretty aggressive tightening path. I expect another 75 basis point hike. Just a prediction. We don't know. However, the Federal Reserve has said, depending on what the jobs reports do and what the economy does, they're going to raise rates. So we can plan on that in November. They might reduce it to 50 points in December. The good news here is the unemployment situation remains constructive. It was strong. Now it's moderating. They're trying to slow down the employment rates, which it seems counterintuitive. But the Federal Reserve wants unemployment to stay at a certain level to help combat inflation. There's nothing in the employment market that suggests things are out of whack. Every time I try to read fast, I fumble. So sorry. The labor market is not the main culprit of the inflationary impulse, says Brian Bethune. There you go. See? Thanks, Boston College, Brian Bethune. Shout out to Brian Bethune. The labor market is not the main culprit of an inflationary impulse. So although people are getting reactive to the job market, it shouldn't be something that we focus on. This person says, Josh Shapiro, it doesn't change anything. The Fed is going to continue to be belligerent, what a funny word for this, and hawkish rhetoric. They're just basically, they've drank too much of the alcoholic inflation, the inflation alcohol. But I mean, this is just, I just want to give a breakdown of where things are at right now. But overall, it's out of our control. We just have to plan for it and prepare for it and understand that in the long term, things might work in our favor. All right. So something, again, that's interesting in the news. I don't know if people saw this week, but Kim Kardashian has to pay $1.26 million of a fine, basically, to the SEC. Yeah, don't worry about that video. So check this out. You probably remember back in 2020, COVID happens. The world's in an uproar. No one knows what to do. But crypto takes off. People are at home. They got extra money. They're not traveling as much. They're being bored. Robinhood takes off. People are on Twitter. Crypto takes off. And not just Bitcoin or Ethereum or any of the popular cryptocurrencies. All of the junk, crappy crypto came up. As the junk, crappy crypto came up, so did the advertising for that crypto. So influencers like Kim Kardashian that has tens of millions of followers started getting paid to say things about certain cryptocurrencies that influence people to trade. It's just crazy that people bought based off what Kim Kardashian said. Just because Kim Kardashian got paid to say something does not mean you should go pay. Matt Damon was doing this. I think LeBron James and other athletes were doing this just because they were getting paid. They were getting endorsed. This is to send a little message like, hey, you influencers can't just start telling people what to buy in marketing for unregulated investments or cryptocurrencies. So she got fined. I just thought that was interesting. So what you can take from this is don't listen to famous people talking about buying and selling stuff. You never know what's going on behind the scenes. Quickly, Elon Musk. The Twitter purchase seems to be on its way. The Twitter Musk trial is on pause, but who knows what's going to come out of that. I feel like at the end of it, Musk is going to own it. But there's just been a lot of news reports about this. I think right now you can ignore them and know nothing has really changed. So in the video I showed you, it talked about health. I want to end on this. New research, National Institute of Health, says leisure activities may improve longevity in older adults. So here's the thing. You get to retirement, and there is a really, really high prevalence of getting to retirement and having anxiety, depression, and unhappiness. Because you get to retirement and it's not what you expected. There's a lot of free time. You're out of structure. You don't really know what to do with yourself. So leisure activities give you a sense of purpose. Activity keeps you engaged, gets you excited, gives you something to look forward to. Physical activity, the first sentence, is vital for your health. Exercise helps you maintain a healthy weight and prevent chronic disease ranging from heart disease and diabetes. I mean, that's just fact at this point. The physical activity guidelines for Americans recommends that adults get a minimum of 2.5 to 5 hours of moderate intensity aerobic physical activity each week. I'm not a doctor, but I'm just saying that came from the physical activity guidelines for Americans. Really valuable stuff. So this is basically some research that came out by Dr. Eleanor Watts, analyzed data from more than 272,000 participants. Participants were first surveyed in the mid-1970s, 1990s. Questionnaire follow-up was in 2004 to 2005 with an average age of 70. Research examined the risk of death during the 12 years of the study. They compared reductions in that risk provided by different levels and different types of physical activity. Results were published on August 24, 2022. Right here is important. Among older adults who exercise regularly, walking was the most common. It was followed by aerobic exercise, cycling, golf, swimming, running, and racket sports. Older adults who participated in any combination of these activities but did not meet the recommendations in the physical activity guidelines had a 5% lower risk of death during the study than those who were inactive. So exercising, being active, lowers your risk of death. That's essentially what this is saying. There's a variety of things. Those considered active with at least the amount of aerobic activity recommended by the guidelines we spoke about above had a 13% lower risk of death. So the more activity you get, you follow the guidelines, you're increasing your risk of death. You're decreasing your risk of death significantly. It's really cool to see that fitness and health has tangible outcomes that we can control and impact. So money is very important in retirement, but so is your health. Don't ignore it. This is the next weekly. This is all for the weekly market recap. I appreciate everyone tuning in and checking in. This is just the beginning. We're going to do these every single solitary week, quick recaps like this. So make sure to like and subscribe. You can follow me on, let's see here. Where do I want you to go first? I want you to go to YouTube, youtube.com/Thatcher Taylor. Subscribe to the channel. That's where these are going to go as a YouTube. Go to LinkedIn, Thatcher Taylor on LinkedIn. Follow me on LinkedIn. This will be streamed live on LinkedIn. And then go find me on Facebook, Thatcher Taylor. That's where these are predominantly going to go. If you have any questions, you can always reach out to me. Thatcher at ProPathFinancial.com. Thatcher at Pro. You know what? Here, check this out. I'm going to write it for you. Check. You watching? Keep watching. At ProPathFinancial.com. That's my registered investment advisor. I help people plan for retirement for the second half of their life. I lead with taxes. If you ever have any questions, let me know. Thanks for watching. Can't wait to see you.